How to make a profitable trading strategy even more profitable. So hello, welcome back to another Edgewonk Trading Journal review. And thank you for all the submissions. If you are an existing Edgewonk user and you want me to review your journal, check the link in the description below. If you're thinking about getting Edgewonk, also make sure to check the link in the description below, because if you need help along the way, we will be there to assist you and provide such in-depth journal reviews as well. So let's take a look at this very, very interesting journal. And when we just take a look at all the basic metrics and have the first glance here at the home tab, we can see that this trader seems to be quite profitable, 26% gain over 100 trades. But recently his performance has topped out, and this is something that we will look deeper into. But overall, his system looks very promising. And when we look down here further in the overall evaluation, we can see that only with a 33% win rate, this trader seems to be trading very, very profitable. And when we look at the individual statistics here, especially for position sizing, it seems that the trader is very, very conservative and very, very consistent, which is great to see. You can see his average winning performance is 2% per trade. His average loser is minus 0.85. So probably he's using a 1% per trade rule, and he seems to be applying this religiously to all of his trades, which is great and a very good starting point. So you can see this trader seems to be very on top of his position sizing. So this is a great first start. When I looked through his journal, it seems like he has filled out most of the things. The only thing that I would really recommend, not only to this trader but to all the traders, is to really make use of the entry, the exit, and the trade management comments. So for every trade that you enter in Edgewonk, you can enter a comment that describes your entry, a comment that describes your exit, and a comment that describes your trade management. And those should usually be process related. So how well did you execute your entry? Was the trade according to the rules? Was it in your trading plan? How well did you exit the trade? Was it in your trading plan, or did you act emotionally? And also in the trade management. This trader didn't really enter all the comments here as nicely. So this is something that going forward the trader could really make better use of, because we have often seen that once a trader starts really utilizing those comments, it helps become more aware of how a trade is executed and how well the trader can stick to his rules, or maybe even not. So what we want to do, or what I want to do, is I want to focus on, when we go to the equity graph, I want to focus on the last portion of the equity graph, because it seems like the last 25 to last 30 trades, he suffered quite significantly, and previously there was never such a big drawdown. So this needs to be addressed, and this is where the trader probably can find the most value going forward. So what we want to do is, as always, we want to look for outliers, and we can do that in the trade analytics graph, or in the trade analytics table, I should say. And what you can do is, based on all the tags that you used in your Edgewonk journal, you can get a very, very detailed breakdown. So what you can do is, let's start with his custom statistics. I have no idea what those are, so they are very strategy specific, but still we can gain a lot of insights. So let's start here with the lowest one, trend. Probably this means the trend on a 20-minute chart and a 20-minute time frame. And if we get the breakdown here, you can see here he has comments for up, down, and neutral trending phases. And overall, when we look at all of his performance over 100 trades, everything is performing very, very profitably. His expectancy is quite positive, and also the sum of his gains. And if you have watched the previous journal reviews, what you should do is always look for outliers. Outliers in the sum gain column, and outliers in the expectancy column. Because once you can find the outliers, that's usually where the trader loses the most amount of money. And this is where improvement and where the focus should be, because then you will see the biggest change in your performance overall. So let's apply the filter for the last 25 trades. And once we get that, you can see there's already quite a big difference. It seems like for neutral trends on a 20-minute time frame, the trader is losing quite significantly. If we just go back to the chart lab, you can see this is where the peak was. And over the last 25 trades, the trader has lost $890 US. When we go back to the trade analytics, and you can see just for the trades that are marked neutral, he lost $940 US. So this is clearly something that the trader needs to address. Maybe something in the market has changed that needs his attention, because his strategy might not be able to adapt as easily anymore. And only the neutral comments already made up for more than all of the losses. So changing this approach would already have turned the trader into a more profitable one. So we can go to the chart lab and go to the custom statistics. You can filter for those. So we want up and down. And you can see instead of losing $890, the trader would have made $600. So this is a huge, huge difference between winning and losing. And this is already a great starting point that the trader should address and should look deeper into his trading. So let's clear those filters again. So let's take a look at his entry comments. Seems like he is analyzing his entries. We want to check the last 25 trades again. And we can see that there are no really big outliers. So here you can say, okay, there's something, stop burner probably might be something that the trader needs to look into, especially because his win rate is only 16%. His expectancy is not that different because it's still in line with overall. So this is not a big outlier. But his overall sum of gain, this should be addressed as well, actually. Another custom statistic that the trader uses here is the one, this probably means divergences. And here we can actually find two big outliers. So HVS, whatever this means, and this one, they both account for $1,000 US losses. Also, this one seems to be quite an issue, so volume divergence. So those are the ones that seem to be not working right now. And this could be already a great heads up, because maybe something in the market is changing. Maybe he did make some adjustments to his trading, although his overall approach looks very consistent. Probably the more likely scenario is that something has changed in the market and that is not really working as nicely anymore compared to when we look at it previously. When you get the breakdown, it all looks very, very good. There are no big outliers. There's one factor that is performing negatively for him, but just barely, so probably not enough to investigate here further. All the other comments are very, very positive. So it seems like recently in the market something has changed, and this is a great heads up for the trader and a good starting point to do his further investigation. We can also look, for example, at the ATR, whatever this is, and here we can not see any outliers, so this is okay. And this is really highlights the importance of only looking for outliers and only for looking at things that really, really stand out, because that is really where you should put your attention to, because this is where you will get the biggest rewards in the beginning when you improve your performance. One thing you can really see nicely in this journal is when you go to the chart lab and under the trade management, this is how a trade management graph should look like. The orange and the green line, they are very, very close together. The orange line measures your actual trading performance in R multiple, and the green one analyzes your potential trading performance based on a set and forget approach. So if a trader would make errors in his trade management, maybe he's closing his winners too early, maybe he's letting his losses run too long, you would see that those graphs and those two lines, they would diverge very, very significantly from each other. But here, for the most part, the graphs are very, very close together, which shows that the trader is applying a very, very consistent and good trade management approach to his trades. You can also see that when you go to the simulator, and let's use 20 simulations over his current performance, it looks very promising. The graphs are close to each other, which is the important first point. The further away the lines are, the worse usually the account volatility is and the less profitable a trading system is. But overall, the system looks great. But if we filter for the last 25 trades, you will see that first of all it points into the wrong direction, and also the graphs and the lines are further apart from each other. So if we extend it to the last 50 trades, you can see that it's still pointing into the right direction, but the lines are much further apart compared to the beginning. And when we look at the chart lab and go to the equity graph, you can see why. Here the trader started profitably and then gave back almost all of his profits. So this approach is much more volatile than in the beginning. When we look at his whole trading performance, you can see that here this performance is much more profitable, and the simulator shows you that as well. Now we are going to look at all his trades again, and you can see a very profitable outcome. But if we only look at the last 50 trades, you will see that the graphs and the lines are much further apart from each other. So the simulator gives a good idea of how volatile your current performance are, how profitable you are overall, and what to expect going forward. Another thing that I would recommend to the trader is that he's making more use of the trading sessions. He has not entered any trading session where you would review your trading week or your trading day. It's just a very nice way of stepping back from the hectic and the stress of real-time trading and taking a time to reflect on the week and the day. Also, I noticed that the trader has not entered any screenshot for his trade. So this should also be something the trader should look into, because the more points you have in your journal, especially if your performance is suffering, this is really where you should be on top of your routine and your record keeping, because this is where it really needs your attention and where you really need to put in your time and your focus. Other than that, the statistics look really, really promising. The trader is on the right track, and with the use of the custom statistics in Edgewonk, you are able to find performance leaks very nicely, very effectively, and it could highlight, like we've seen in other reviews, that the trader is not performing at his best, but in this case it seems like we are already dealing with an intermediate or experienced trader, and it may be the reason, or it may be a reason that the market has currently changed, and you will also find this out with the help of a good journaling routine.